we go. Okay, so I want to come. Peace and love, everybody. Welcome in the room. I just wanted to come on here really quickly and show you guys how I see my charts and how I make my plays. And don't come on here seeking financial advice. This is a disclaimer. I'm just going to show you how I trade, how I make my plays, and how I set up my technical analysis and what I see when I trade Forex or when I trade in the markets. So, with that being said, I'm just going to go ahead. Currently, it is 3:46 a.m. I like to catch the London session because that's just like one of my favorite sessions. I feel like the London session always pays, and I just really like the London session. Like the London session always pays. Like they always bless. I fucks with the London session. Okay. So with that being said, I don't I recently started to trade with my charts like this. I know you're probably like, why the hell does she not have on the green and the red candlesticks? But I realized that I really don't need them. I really don't need the colors because once you know how market flows, once you know market structure or the flow, high, higher highs, higher lows, consolidation, liquidity, of where the aggressive buyers show up, where the aggressive sellers show up. You really do not need the candlestick colors. I feel like the colors are very good for beginner traders, but once you understand the basics, you kind of graduate from there. And I've coming on here a little bit more advanced. I don't want to make it seem like I'm a pro or no professional or expert, but I am a little bit more advanced than the average beginner. So I've been trading for about a year now. So I'm only a year in. I'm still a rookie, but I know more than the average. And if you want to begin to get into candlesticks and just kind of identifying certain things, just comment down below and I can begin like making videos for that. But I also am planning on uploading one of my sketches explaining some of the candlestick basics as well. So with that being said, let's move forward. So currently I'm looking at gold. Um, and the platform that I'm using is TradingView. I'm currently looking at gold. This is a symbol for gold. So XAU USD is how you know that we are in the gold market here. And down here is where you can identify the month. So here, maybe I could draw for you guys so you can see. My paintbrush. Let me go here. So here is where they won't let me go. But here where I'm circling, this is how you identify what chart you're on. And then here, down here, is where you can see the different timelines here. So this was back in December, February, March, April, May, and now we're currently in June. And that's why we're here, right? And the reason behind me starting to do this again is not because I'm a professional trader and I'm trying to show you guys my technique and show you how I'm a guru. No, I'm actually teaching my little brother how to trade. So this video is actually for him. So if you're watching this, shout out to my little brother, Jarian. He's going to be tuning in and we're going to be learning how to read these markets and learn how to trade. So, again, some of the basic things that just to begin to look at when you are looking at these charts. I was taught when I began to trade, I was taught to look at the markets in these charts like it's painting a picture. And one thing about me is like I love art. So when I can compare something to art, when I can compare something to creativity and visual, and I can really begin to paint a picture in my mind, that's when things begin to make sense for me. So when the markets really begin to click for me is when I begin to understand that the market is literally just painting a picture. And as you can see, if we go back in time with gold, um, one thing that I've learned since I've been trading is that the market is always testing and retesting in places that it's already been before. So, for example, you could see here back in yes, instead of a square, let's do a circle. So you can see here back in June, this was June 2020, right? So this was June 2020 here, right? June 2020. The market came and it tested here at 1678.29. Let's just say 29.29. Okay, so this is where the market was, and this is where the price. You can see the market went up, and we tested for a new high here. So from June, in a month's time, here, August 20, gold made a record high. So this was gold at its highest peak here at let's see, here at its highest peak at 2075.794, and that is gold at its record high of all time, right? So, like I said, the market is always testing and retesting in areas that it's already been. So with that, knowing that the market is retesting and testing in places that it's already been, to think of it in probabilities, this happens about 75% of the time, right? So if the market is testing and retesting 75% of the time, that's how we can take advantage of that probable outcome, right? So we have the market here, tested here, and then it came up here to test for a record high. So like I said, the market is always looking to test and retest in places that it's already been. So as you can see, the market came back down here, went back up, tested, and then came back down and tested again here. So I'm going to show you what I see. So from this low here, the market went up, tested for a new record high, but then you can see the market came down, and you see it tested here, and then it went up, it came back down, it went up, and it tested in the same area. So you can see, let me mark this up for you so you can see it, where you can see what I see. So from this here, you can see the market. Basically, if you think about it like a bouncy ball, you can see it like the market bouncing between 2 points, right? And that's how you kind of begin to see the movement of the test and the retest. And I'm sorry, I probably should have cleared some of this out. I was already marking up, so I probably should have cleared out some of these lines to make it easier for you to see, but we're in it now, so it's all good. So like I said, the market was here at a low, it came, made a record high, it came down and tested here where I marked up, It came down and tested here and down and up, and then it broke this level, came down here, but then it went right back up, broke this level again, and went back up. So you can see it's like a bouncy ball. Like you bounce the ball, it go up, and it's like do 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 do. It's like a frequency, right? So the market is always working in it only moves in two directions. So that's up and down. So the market can only move in two directions. It can either go up or it can go down. That's it. Now you might hear people say it's going sideways, but that's only them saying that the market is not making a significant up or down move. So they might call it sideways, but that's just, really an illusion type of talk, or really just a figure of speech, because the market technically never goes sideways. It consolidates, but the market only moves in two directions, and that's up and down. And so the market is always making higher highs and higher lows, or higher lows and higher highs, right? So with that being said, it is very important to know when the market is making those higher highs and those higher lows. However, I'm not going to get into higher high and higher low in this video. However, if you stay tuned for more videos, or if you just comment below and let me know if that's something that you would like me to go more in depth with, I would be willing to do so. But right now, just to save time and to not make this video too long, I just want to touch on the basics, okay? So with that being said, what we know now is the market is always retesting and testing, and it's moving in two directions. And like I said, where the market goes, it always wants to come back to that point and test it for that point. These points in the market, these highs and these lows, are basically like magnets in the market. So when the market comes in these areas, they want to go back to those areas and test, right? So because that's where significant buying and selling took place. So as you can see here, the buyers was building up their momentum to move the price to this higher high, right? So once it got to this higher high, we ran out of buyers to buy the market up. So then the price began to drop. And this is where you get this sideways action. This right here is a perfect example of that sideways action, where the market is not making a significant amount of moves up or down. And as you can see, the market broke here and it tested for a low here. So let's mark this up for the people. So it tested here for a low, right? Went back up, tested here again at this high point. And as you can see, this was a retest because the market had tested here before and the market had tested here. And what did I like to say? The market likes to go back and test the areas that it's already been. So once it was at this higher peak, it came down because why? There was no more buyers left. So the market began to move down. And then as it moved down, it eventually began to consolidate back up. And so it tested here, came down, tested again, came back up, tested here, came down. And so that's 1, 2, 3, 4 tests of this market structure right here, of this line, this rectangle that I drew out. This is a this was what you would call being a part of the market structure, right? Because we're painting a picture, we are building a monument. That is how I learned, to really understand, and how I really began to grasp the concept of what the market was doing, when I realized that the market was painting a picture and it was building something, right? So with that being said, moving forward, So like I said, the market came down. This was back in June 20, 2020. So now the market came and tested this same area here. And let me circle this up here. In this area here. So this was back in June here. And this was here in March where the market came and tested at this level here. And now we're back, headed back into an uptrend now that we are here in June. And currently I am on the daily chart, but I'm going to show you how I begin to break down the market structure when I am looking for a particular trade to hop in. So currently on the daily chart, the market is, as you can see, in an uptrend. And I'm going to draw this up for you right here. You can see that the market is currently in a uptrend movement because the market is moving up, right? Simple enough. So with that being said, I'm going to go in a little closer because I am in the daily chart. So this is like a bird's eye view of what is going on a smaller increment of time. So let me move this line out of here. So currently, we're just going to be focusing on this particular area right here in the market. Okay. So I'm going to zoom in to my 4-hour. And as you can see, we're getting a little bit closer. We can see a little bit closer of the market structure. See here on the daily, how it is structured here. But once we go down into our 4-hour chart, you can see the breakdown of that structure. So with that being said, how I find my sniper entry is I like to look for where I see significant price movement and where I see aggressive sellers enter into the market, aggressive buyers or aggressive sellers enter into the market. And how you identify if you see aggressive buyers or aggressive sellers enter the market is where you see a significant move in price action from a particular point. For example, this right here, as you can see, this candlestick right here is very tiny. And as you can see, the price didn't move much once it got to this point. It opened and closed pretty much in the same at the same price right here. And let me zoom in a little more so you can see even clearer. Because I just got some content, so I got that 2020, but not everybody might not have that 2020, you feel me? So as you can see, let me circle it as well. I probably should do a different color, but it's cool for right now. So as you can see, this candlestick here, let me switch up the color. That didn't do much. Oh, I'm just changing the outline. Hold on, let me change it. Okay, there we go. So this candlestick right here, you would call this little candlestick here, I tried to circle it the best way I could. You would call this little candlestick here, people call this a doji candle. This candlestick here right in the middle. People call that a doji candle, and the reason they call it a doji candle is basically price open and close at the same price pretty much in this time frame. So this is a 4-hour chart. So within a 4-hour time frame, price open and close pretty much within the same area. And so that's what formed this doji candle. So with price open and close in this pretty much in the same price at the same price, and then you see price aggressively or insignificantly move down from this point. This is how we identify aggressive activity in the market. So you can see that from this doji candlestick, the price moved down significantly, like aggressively. It literally went from 1909.642 all the way down to um 1856.046 um, in pretty much one whole move. So this is how you identify aggressive activity in the market. And I love when aggressive activity shows up in the market because that's how I know where the big money is in the market, right? So what I like to do when I see a scenario like this, I will take I begin to mark up. So I will take my line here and I will put it right here where the aggressive sellers showed up. So I like to put my line right up under that candlestick previous, right before this aggressive move. So as you can see, this is how I find my sniper entry. So right now we are currently on the 4-hour chart. However, I'm about to go down to the 1-hour chart so you can see this even better, right? So now we are down on the 1-hour chart, and as you can see, here is where we had it marked up, right? You can see how you can see even greater how the market moves significantly down in this direction, right? So with that being said, that right there is how I begin to look and identify where the big money is showing up in the market. So um, let me see. And this is also, excuse me, I'm sorry. This is also where this is also where I began to identify breaks in market structure. So as you can see, I came back to my 4-hour chart just so I could show you the markup. So you can see price was here. He came down, broke structure, came down, tested here, came back up, down, up, and now it's headed back down. And this is how I identify order flow. I'll find a break in the market, and this will be my 0 point, right? And then I go to that next point of the next point at, in this case it was a downtrend. So from my 0 point, the market went down and then it came up, tested, came back down, came up. And now from this number 4, this is a significant move in order flow because this is how the market moves. Like I said, it moves in those, it moves testing and retesting areas that it's already been, but it also moves in a order of flow, which is called order flow. And order flow is basically the aggressive buyers and those aggressive sellers trying to strategic, strategically place their orders in the market without causing a significant amount of movement that makes it obvious, if that makes sense. And I hope I made that as clear as possible. If you need me to clear that part up again, I'm willing to, but I'm just going to keep moving forward before I confuse myself, okay? Because again, I am still learning. So from this 0.0 down one, I like to call, and I like to count it out. So this is my 0.01, 2, 3, 4. And from this 4 point helps me identify where the market is probable to go. See, a lot of traders try to sell guaranteed, but one thing about this market is not guaranteed. So this is a high probability of where the market is going to go. And since I identify that the market will be my hypothesis, my bias is that the market is selling off. How I like to measure my sales is from, like, again, those low points to those high points. So I love this Fibonacci retrace because this is how I find my entries. So I'll take my 0 point and I will take um excuse me, not my 0 point. I will go from my lowest point if I'm looking for a sell, and if I'm looking for a buy, I will go from my highest point. So since I'm looking for a sell, I'm gonna go from my lowest point, which is here down at the 1, and I'm gonna drag it up to the highest point after the 1, which is at the 4. And this is how I began to identify where I'm entering into the market. So currently, gold is in a downtrend. So this is where I began to look for my entry. And this is where you have to also be patient, because trading is not about just putting on a trade. It's really more so about waiting for your move or your bias to be made true. So with that being said, with everything in alignment, so I got my market structure break here, I got my order flow lined up, and I got my Fibonacci. And as you can see, this is how I use the Fibonacci tool. Is how I use this tool to measure for my entries. So with price crossing this 23.6 mark, this is how I know that price is currently in a continuation. Once price gets to this 38.2, this is where I begin to look for my entry. Now, sometimes I also like to call this zone between the two. So this zone right here between this 23.6 and this 38.2, this zone right here between these 2 points, I also like to call this my risk zone, because this is where you really have to calculate your risk. And this is where, it gets a little risky. So for me, I will say sometimes I do go ahead and hop in the trade, and I will trade from this um 23.6, and I'll catch these couple pips to 38.2. However, that is very risky, and I would not recommend it for a beginner trader. There are other things in indicators that I look for when I do that. And I'm not going to teach you that right now, because that's just going to form bad habit, and I don't want to do that. So what I am going to tell you to do is, what I like to do is just to be sure and to make sure I'm entering into a risk-free trade, which I'm all about risk-free trading. I like to wait for this price, whatever price, to come down and pass 38.2 and close. So I'm looking for this candlestick to close past 38.2. Once this candlestick closes past 38.2, my target is always, 100% of the time, 61.8. And this theory, if set up properly, and everything is set up properly, you have marked up according to the guidelines, you didn't miss anything. I Most people are gonna probably hate me for this or probably tell me I'm capping, but I will say 99.9% of the time, once the price comes past 38.2 and closes, it's 99.9% of the time. And that's my statistic, but I'm gonna say 90% of the time price comes to 61.8, and 61.8 is what I like to call my golden zone, because that's where the gold is, baby. 61.8 is always my target profit. And that is how I make my moves and get my moolah out of the market, because that's what it's all about. Paying yourself when the market makes money available to you, not trying to make money available to you in the market, but no, when the market makes it available to you is when you take it. So I now play the waiting game, and I wait for price to come down and test 38.2, and I wait. Once it test 38.2 and crosses and closes, my target is always 61.8. And that is just a couple pips. You feel me? I think depending on what chart you on, it's about 50 to 60 pips. And that's really all you need. Sometimes we try to catch moves like this where it was all the way up here and we try to catch this whole move, when it's like you don't even have to catch this whole move to make money in the market. You could have caught from here to here and been straight. And that's what I like to look for in the market. I'm not looking to catch a whole move from the mountaintop all the way down to the valley. I'm just trying to get from the mountain peak, maybe mid mountain. You feel me? And then shit, if I make it down to the valley, let's get it. That's even better. But it's all about, I always look for 30 to 40 pip moves, but also those 50 to 60 pip moves also pay very well as well. So it's all about getting this part right, though. The key to this strategy is getting your market structure right and your order flow correct, because if you mess up on your market structure and your top down analysis overall, you will fuck up this whole strategy and it will not work out in your favor. However, if you get your market structure down, your technical analysis down, you are going with the trend, not against the trend, this strategy definitely pays well. And with that being said, I'm going to go even further into the chart just to test my theory, because that's what I like to do. Because currently I am on the 4 hour, but I would also like to check out the hour chart, just because sometimes once you go closer in, you can get a better look at what the market is doing. So let's go down into the hour chart here. So as you can see on the hour chart, you can see the markup even better here from my 0 point down to my 1, 2, 3, 4, and now you can see the market heading down in its downtrend. Um, And then I have my two indicators here. This is just a moving average indicator. So this is my 200 moving average, and this is my 50 moving average. I like to use my 200 moving average as support and resistance. And as you can see with this 200 moving average, it has broken my 200 moving average. So I like to look at this as a potential resistance, right? So again, even on the 1 hour chart, we can also test the theory even more. So like again, I'm looking for a potential sell. So I will go from my lowest point, which on the hour chart is a 3, and could go up to the 4. And as you can see, it proves my theory. So as you can see, the market came down. It was at 23.6. It came down to 38.2. It closed, this candlestick closed past 38.2. This candlestick here closed past 38.2. And as you can see, my target, I could still hop in if I wanted to, but I'm not. My target is 61.8 here. So even on the 1 hour chart, this theory works as well. This theory actually works on any time frame. Like I said, it's all about getting your market structure and your order flow lined up properly, and this strategy will pay. Simple and easy. So, like I said, this is a 90% chance. It's really already came down to the 61.8, and so if you would have gotten in this, you would have definitely caught um, some moolah. I didn't enter into this. I am currently in Bitcoin and EU right now. And those are the only two trades I am in right now. And yeah, let me see. So actually, let me go over and check out my Bitcoin trade. Well, actually, my EU trade. Do I still have it marked up? No. Oh, I do. So here, as you can see, my target. This was really a test because see, sometimes I have a demo account and I also have a real account, and I like to put those risky trades that I like to test in my demo account. So currently, I am in EU just to test and see the just to test and see if the market will be coming to 38.2 in closing. So I copped in this for the sale. And like I said, this zone right here is what I like to call my risk zone. So you have to be a little bit more experienced to trade this zone. That's why I like to wait till it passes and close past 38.2, because once it enters into this zone, this is that risk-free zone. This is what you when you start getting into risk-free trading. So let me go back to my gold so y'all can see that. Actually, I want to show y'all. I want to mark that up. So, like I said, you got this zone here, 23.6 to 38.2. This is what I would call the risk zone, okay? This is the swim at your own risk, okay? Explore at your own risk. You feel me? It pays, but sometimes it pays, okay? It pays, but sometimes, you know what I'm saying, it just don't be pretty pay, okay? But then once you cross past this 38.2 zone and close from this zone to this 61.8, this is what I like to call my golden zone, which is also I could also call my risk-free zone. So this is my golden zone, but we can also call it risk-free, baby, because this is when you talk about risk-free trading, right? And this is all you need from this 38.2 close, from 61.8 is all you need to make money in the market. Again, you don't have to catch this whole move from 3 to 4. I don't have to catch this whole ride from the valley to the mountaintop to make money. I could catch a ride from the valley to the ridge, baby, and still be sitting pretty, okay? And still have a nice view, okay? So, with that being said, I'm gonna check back in later just to show you guys um when the market will be crossing past this 61.8, just to show you that my theory does work. So actually what I'm going to do is go ahead and hop in a trade. I'm gonna hop in 2 trades. I'm gonna hop in this trade on the hour chart. I'm gonna do that right now. I should have did it when I said it, but I'm gonna do it right now. So I'm gonna hop in this one for the, let me make sure I record this. So I'm gonna hop in this one. See, it's already gone. I wonder if they're gonna let me get in still. I got, yeah, they let me get in. So I went ahead and hopped in for this one. My target is still 61.8, but this is for the hour chart. However, I'm gonna go back to my 4-hour and mark up, and I'm gonna hop in from that point as well. So let me do it from the 4-hour charts on the low to high. I'm gonna hop in from here too. And again, this is my theory. This is how I trade. I'm not trying to come on here and act like I'm a guru. I'm just on here sharing what I know and hoping that I begin to vibrate towards like minds that also are on the wave and trying to make money and a living for themselves as well. Right now, I'm just testing this low from the hour chart because it's 3 hour from the hour chart. The low on the hour chart is actually this 3 point. So I was just checking this out as well because yeah, okay. So yeah, and now, like I said, you just wait. And like I said, a lot of times we think of trading, and as you can see, it's headed towards that 61.8. 61.8. It is headed towards 61.8. And sometimes if it's strong, I'm not even going to flex for y'all. Sometimes when the move is strong like this, I will also go ahead and hop in again. Once I get out at 61.8, I'll go ahead and hop in again and ride that bit to 78.6 if the movement is strong. You know what I'm saying? That's just something I do as well. That's just something I do as well. Is just ride it on down the stream. But I was saying something. What was I saying? Um. Oh, I was saying that this is a waiting game. So, like I said, a lot of times sometimes we want to see significant moves quick, or we want to hop in the market and make money instantly. But like I said, we supposed to wait for the market to make money available to us, and then that is when we execute. That is when we hit the trigger. You feel me? We're not just machine gunsmen. We ain't just out here on the trigger and laying on it. You feel me? We are snipers. When you call yourself a trader, when you call yourself wanting to move in these markets, you supposed to move like a sniper. You're supposed to wait for opportunities to happen, but you also have to be in the market so you know when those opportunities are happening. So this is me preaching to the choir as well, because sometimes I will come to the market and there's nothing for me. You know what I'm saying? There's no moves that can be made. All of the markets are consolidating. All of them are not making significant moves, and you just don't know what the market is doing. And just because you have a laptop or some money to throw in the market doesn't mean that you have to, hop in the market. So, with that being said, I am learning, and um, I am learning. I'm learning patience, and I'm learning how to be more selective about those moves and those trades that I want to execute on. So, with that being said, I'm about to hop off of here, and then, like I said, this is the London session, so I like to trade the London session, and then I know this recording ain't an hour. I know I ain't been talking for an hour. But I like to record the London session, and then I wake up in the morning and my trades be done hit TP. And that's a beautiful thing when I could like put on a trade, go to sleep, and wake up and see a blue screen. So with that being said, I'm gonna hop up off of here, and I'm gonna show you the end results in the AM. Well, it's the AM already, but when I arrive. So, peace and love for now. Okay, so this is about a day later. I forgot I entered in the trade from the 4 hour. And when you enter in from a higher time frame, you must be willing sometimes, at times, to hold that trade out a little bit longer. So that's what I did, and it did pay me. As you can see right here, it hit my target, which was that 61.8 mark. And I'm just gonna show you really quickly how the order flow goes. As you can see the market broke, it came down, it went back up, it came back down, and it went up. And then to go in its initial direction where the market was trying to flow. So that is again what you call order flow, is when you can identify areas in the market where the market is trying to flow. So with that being said, peace and love. Thanks for tuning in, and I'll see you all in a new day.